So, hi everyone. I'm here with the one and only Mr. Tom Sosnoff. We're really glad to have you here, Tom. People here in Brazil, a lot of people know you. They watch the videos. I've been recommending Tastylive's videos here in my channel, and people are really, since I have already interviewed Tony and other people from the team, everybody was expecting to listen from you, to hear you talking a little bit about options. And so first, Tom, I want to congratulate you for the amazing job you guys have been doing throughout all those years on researching. You really have helped a lot of people. And I want to thank you for finding some time here today. And say to the viewers, because people always write to me and say, hey, thanks, Davi. I became a profitable trader after I started watching your videos. So I'm saying to the viewers, you should thank this guy right here. This is the one you should thank, because all those researching and all those information really is thanks to the job, the work that Tom has done throughout all these years. How are you doing today, my friend?
I'm actually doing great. I feel good today. So happy to be here. Let's like I said, nothing's off limits. Ask me anything you want. Ask me anything, as we say.
Great, great. Thanks a lot, Tom. So Tom, let's talk a little bit about the early days and when you started trading in options. How you got in touch with options? When was the first time you said, whoa, derivatives, you start knowing this thing? And how was the really early days? And how can you tell us a little bit about the story, Tom?
Well, the really early days is when I graduated college in like around 1980. We were in the middle of a recession. It was a pretty bad time. I mean, as a kid, I didn't know it was a bad time, but everybody around said, "Hey, it's a bad time." So as I was going through the job interview process, I got offered a job on Wall Street, which at the time I guess was pretty hard to get, but I didn't realize it. And so I took it because it was the only job offer I had right out of college. And so the next thing you know, I'm in finance. And I kind of gravitated very quickly towards learning about options and learning about derivatives because I was fascinated by it. And when I got my first job on Wall Street, somebody said, hey, if you want to move to Chicago, we'll put up the money and you can go trade. And I was like, I quit my job, packed up my car, went to Chicago, and I've been here ever since.
Yeah. So you're not originally from Chicago, right?
I'm originally from New York, but I've been in Chicago. I've been in Chicago now over 40 years.
The CBOE is there at Chicago. So you've been so you started trading and you've been trading a lot of long time. And then how was
I traded. I traded 2 decades, 20 years on the floor of the CBOE as a market maker. And then I've done 2 decades, a little over 2 decades, building Thinkorswim and Tasty.
Yeah, that's what I want to ask you, Tom. How was the decision to start a business? Because it's not an easy decision, right? When you're a trader, you don't have to deal with other people. You don't have to handle a team. You don't have to deal with customers. But you say, oh, I'm going to start a business. How was that? You say, well, the market needs a broker specialized in options. How the process came to you?
Well, it's an interesting story because it didn't happen overnight. I mean, I spent 20 years making markets, 20 years standing in the pits. And after 20 years, you get to the point where you're like, I don't know, maybe there's something else out there. Maybe, the business is changing. I don't see open outcry hanging around for the next 20 years. I think we're moving to computers. The business is going to change. And so, I made a conscious decision to try to I had a lot of knowledge about the business from being a market maker for 20 years, but I was not a technologist. And the only thing, I had 2 things in my favor. One was that I had learned a lot in the prior 20 years. And the second thing was that I had made some money, over that 20 years, some pretty good money. So I had enough money to be able to take a shot. And so, those were the 2 things. I was afforded the opportunity and I went for it. That's all.
Yeah. And you like technology, right? Because you're always talking
I
about.
love technology. I didn't understand technology. I was not smart enough. I was not a technologist, you know, like I was smart in some ways, but not a smart technologist. So I had to surround myself and find smart people in the technology field.
Yeah. And how was the decision to to sell Thinkorswim? You guys, it was a little doubt. You say, man, I don't know, maybe because when you start your own business, then it's like a child, right? It's not easy to sell. Saying, okay, I'm gonna sell.
You know, we had this rule and we never shopped the firm. Like we never put it on the market. We never shopped either firm, Thinkorswim or Tasty. But we always had this rule that, we'll always look and see, not we're traders, right?
Yeah.
If you're not a trader, you think differently. But I'm a trader. So I was like, when the right offer comes around or when the right deal comes around, we'll look at it. When we started Thinkorswim, we basically never had a single person talk to us about buying us out, for almost 10 years. And then we got bought out. We had five people, five different groups trying to buy. I'm sorry, not five. We had three different groups trying to buy Thinkorswim after 10 years. And we picked TD Ameritrade because at the time we thought they were the strongest player. When we built Tasty, we had five groups trying to buy Tasty after 10 years.
Yeah.
Nobody came to us in before 10 years. So all these processes took 10 years.
Yeah.
So it wasn't like none of them were overnight successes. They were just we built two amazing companies. They were both billion-dollar companies and we built them from scratch, but they both took 10 years, which is cool. It's fun. It was great. Incredible experiences.
Yeah, 10 years of hard work, right? You done an amazing job
Hey, I still bust my ass every freaking day. I mean, I was at work. I got up at 4 this morning. I don't need to. I just love it. I started working at 4. I'll work till about 6 tonight. I mean, I don't, it's what I do. It keeps me alive.
Yeah, that's why you're successful, man. That's why you're successful. No doubt about that. So Tom, let's talk a little bit about how you like to trade. You share a lot of your the way you trade
Yeah, sure.
with other people, right? You share a lot of that.
Yeah.
But I had some questions here that always comes to people's minds here, the traders, especially here, my viewers. Um, One is that always confuses me a lot is about buying power usage, right? Because since you have a large account, how much buying power you use in one single trade? You keep that in track? Is because people, not everybody has large accounts, and some people don't.
I understand.
Can, yeah,
I mean, you have to. I'm very, I'm really good at some things. I'm really bad at other things. And one of the things I'm good at is, and this is not something that I was good at for when I was a floor trader and when I started out on the retail side. I traded way, way, way too big relative because I didn't know any better. Now through Tasty, I've learned a lot about trading size. So now I'm very disciplined. So I think that, I mean, I've reduced the size of my trades. I trade a lot more, but I've reduced the size of my trades. I think that it's, I it depends on the type of trade, but I'll use anywhere from 1/10% of my account to maybe 1% of my account for most trades. Now my account size is a little bigger. For smaller accounts, you might use a 0.5% to 3 to 7% of a trade, per trade. It really depends, but you have to be consistent.
yeah.
You can't be all over the place.
Yeah. So to trade every day and use a little less buying power is better than to do, I don't know, maybe 3 to 5
Yeah,
trades.
I think for sure it is better to trade more and trade small, trade often is the single best approach. Trade small, trade often, manage early. That's the best approach.
Yeah. No, I agree with you on that, Tom. So, Tom, let's talk a little bit about the short put, man. I know you're a big fan of selling puts, right?
Sure.
Um there's a parameter where you decide, okay, I'm just gonna go naked, or I'm gonna do a spread here. You look at volatility or high volatility. I'm gonna sell a naked put. Maybe the volatility isn't too high. I'll do a spread. And about the spreads, how exactly you like to do it? Because when I do it, I keep a very wide range between the wings, right? The short and the long. How you do that? You keep all the I don't know, maybe one third collect one third of the strikes. You think that's is a better idea, or say most of the times you just go naked?
I do sell some put spreads, but the majority of the time, because of my account size and because of the way put skew, works, put spreads tend to trade a little cheap. I prefer naked puts. I prefer to be short naked puts than put spreads or something else. So the majority of my opening trades, if I wanted to get long, would be short puts, naked.
Yeah, yeah. And high IV is always what you look for. You see, there's a minimum. You see, on ETFs, of course, when you have high IV, you want to go for the ETFs, but that doesn't happen very often, right? You say no, the IV on the ETFs are too low. I'm gonna try maybe, I don't know, some other stock from a company. How is that process to you?
Well, we base it so yeah. Obviously, there's an a better opportunity with high implied volatility rank. Implied volatility itself is very hard to judge whether it's high or low because you have no context. But implied volatility rank gives us that context. So we'll use implied volatility rank to kind of help us to pick the underlyings that we're going to trade, and then we focus on high implied volatility rank and liquidity. Something has high implied volatility, that's fine, but if it's not liquid, it's not interesting to us. So we need two things: we need high implied volatility rank, and we need a decent liquidity, and then we're interested. At that point, we're pretty indifferent to product. So like I don't think about things based on product. I think about things based on liquidity and implied volatility rank.
Yeah, yeah. Let's throw a hypothetical scenario here. I
Sure.
spy trading IV rank at 90 IV rank on spy, right? What do? You're just gonna say, I'm gonna sell a put right here in this situation. Of course, I know there's some things like if you're bullish, you might be some bearish. You have market awareness and all these things, but spy at IV rank 90. You're just gonna say I'm gonna sell a put, or you do a strangle. You like to sell the calls too, because when
Yeah,
IV
I
rank
mean,
is at 90, market might probably went down a lot, right?
yeah. So in those cases, I probably would do something like a skewed strangle. I would probably sell a put that's a little bit richer than the call. So I'd probably sell like a 16 to 22 delta put, and maybe let's just say, for example, a 10 delta call. So my call might be $1, my put might be $3, and that would be the strangle. I don't in situations like that when I'm a little nervous about the upside, but I don't have a strong bias towards the upside, I will always sell both sides. I don't, but I'll skew them, but I'll sell both sides.
Yeah, that's fantastic information, Tom. This is incredible. The viewer's gonna love this interview. I'm pretty sure about that. There's something that's a little bit controversial. There are in the money calls, right? Because people pretty often people have problems right here. And I see people they trade to bigs, and once the call gets in the money, they just keep rolling. And once in a while, the stock just keeps climbing higher, right?
Sure.
Yeah, we saw. We have a friend of mine. They lost a lot of money in Tesla in 2021. This the bull market that Tesla went on. And how you react to that? Say, my calls now is in the money. My strike has been breached. Um, you do another trade and you pick the credits to buy that thing back. You like to roll. You have some process on the in the money calls.
I do have process on in the money calls. I mean, generally, we don't sell. Well, we'll never sell in the money calls to open, but we will be short in the money calls, through adjustments and things like that. And I think the challenge for most traders is, to figure out what to do before you get to that point. Like if a call's already in the money, there's not a hell of a lot you can do at that point. So in the future, what you want to do is you want to make adjustments before you get breached to the point where you're in the money. And as long as the underlying is liquid, you can recenter, you can adjust the strikes. You can, obviously, if you're short a call and it goes in the money, you can sell a put. If you're short a put and it's going in the money, you can sell a call. There's all these various adjustments you can make. You want to be proactive. You want to do it before, you get the breach, the actual breach itself. So you want to be a little aggressive in most of these places. I find that being aggressive is better than being passive when it comes to, position adjustments.
Yeah. And that's one of the reasons why you shouldn't trade too big, because maybe to adjust positions, you're going to use a little bit more buying power, right?
Well, actually, when you go inverted, you'll use a little bit more buying power. As long as you continue to be diligent about your positions, your buying power usage shouldn't change that much. One of the things that keeps your buying power in check is staying small and managing early. Because if you manage early, you eliminate most of your outlier risk. And the only thing that really messes you up buying power wise is when you get caught with outlier risk on a position that you shouldn't have got caught on. And the way to avoid that is to be fairly aggressive with managing the trades, and to when I say fairly aggressive, meaning make the necessary adjustments, and don't hold it much past, that midway point during the durational cycle of the trade. If that's the case, you eliminate most of your outlier moves, and your buying power shouldn't come into question.
Perfect. Great, Tom. You do trade every day, every single day?
Yeah. Oh, absolutely. I make on average, I make about 100 trades a day.
Wow, man. Incredible. Because once I talked to some people who watch my videos say, well, I trade every day. I do at least one trade per day. And people say, wow, you do trade every day. It's amazing. I trade only twice a month. So you trade like 100 trades. It's hard.
Well,
it's hard to keep track, right?
A lot of those, yeah, it's hard. But a lot of those trades are adjustments, and I'm tweaking my position. I probably open and close maybe, a dozen trades total a day. Everything else is just keeping my deltas in line, adjusting. I'm a junkie. I'm an active trader.
Yeah. You gotta love the business, right? So 21 days to expiration this week. You're gonna roll everything. You're not gonna let.
Oh yeah. Yeah.
And you're not gonna let anything say, no, this is a 1-2 delta. I'm gonna let it expire.
Yeah,
out of the money.
Cheap options that are very deep in the money or very far out of the money, I might just let those go. But I'll roll about 95% of my positions at least.
So this is a busy day, right? You to roll everything.
100%, very busy.
Yeah. Well, we've been through that, and a lot of people here in Brazil are like that, because I'm always recommending them to watch Tasty Traders videos. So 21 days, people are like waiting. Well, this Friday is gonna be a busy Friday for us here. So
beautiful.
Yeah. About one thing that is always I had was one of my doubts, Tom. There is portfolio delta, right? Delta neutrality, to keep it neutral. What is this parameter to say, oh, I'm neutral right now? Okay, I might be. It's a percentage of my account. I don't know if I have $1 million account. It's a percentage. How you keep that in track?
It's very hard because it is based a little bit on account size. I mean, for me, delta neutrality is like, if I'm, but again, my account size is a little bigger, but if I'm plus or minus, if I'm inside of 1,000 deltas, I consider myself to be delta neutral, relatively delta neutral. If I'm inside of 500 deltas, I'm really delta neutral. If I'm inside of 100, I'm flat.
Okay.
Now for a smaller account, it could be, inside of, you're kind of delta neutral at 100 deltas, and you're better off at 50, and you're flat at 0. And then for a smaller even account than that, you might be, delta neutral or 25 or 50, you can consider that delta neutral, but flat 0. So it really depends on account size, and it's a little bit subjective.
Yeah. So Tom, when was the time came where you realized options are made for selling, and to sell options is much better than buying options? Because I know people that the years go by and they don't came to that conclusion. People just keep buying out of the money options. And when it hits you,
it's very difficult. And I don't know if I got there in my first 20 years, because when you're a market maker, you're not really the one initiating the trade. You're the one making a trade based on what somebody else wants to do. So I didn't think about it the same way. But as soon as I became a retail investor in 2001, when we built Thinkorswim, at that point, I knew I was only selling.
Yeah. That's it's hard, because when you got here in Brazil, at least when you all the training materials, the videos, people are always talking about just buying options, and pretty much
Brazil's tough. I understand. It's still, you're still not. It's the same opportunities don't exist in the Brazilian markets yet. They'll get there, but they're not there yet.
Yeah, well, all the companies here, the public traded companies here, if you get their market value and sums everything, and it is still smaller than Apple. Just Apple itself is bigger than the whole Brazilian market. So in terms of liquidity, you can think it's a hard thing. But a lot of people are open accounts in the US. A lot of people are going to the US. It's easier those days, right? And the Tastyworks platform, Tom, any updates, anything new you can share with us here? Anything coming? What about Bitcoins trading?
Oh, well, we already support Bitcoin and Ether and 27 other coins. So they're already built into the platform, plus Bitcoin futures, plus Ether futures. They're built in the platform too, plus Bitcoin ETF. So we have all that stuff. New additions to the platform. We're adding an open API. We're adding we're adding a ton of new features to our mobile applications, including our iPad and everything else. Just crazy stuff. We're building a new mobile application just for millennials. I'm sorry, for Gen Zers, that's coming out in March, which is really cool. We just launched a crypto wallet. So we've got a ton of stuff that we're in the process of building. It's very cool.
Yeah. And congratulations on the platform, Tom. It's amazing, to trade. It's very different. Yeah, it's very different from all the other trade.
It's fast. It's lightning fast. It's stable. It's easy to use. It's the best platform in the world right now.
Yes, no doubt about it. So Tom, what about this year, Tom? 2023. Are you bullish? Because 2002 was a difficult year, right, for stocks.
I'm a little bullish this year. I'm definitely not bearish. So let's put it that way. After last year, I'm leaning a little bit long.
Yeah. I agree with you, Dad. I think about that too. So Tom, that's pretty much it, man. I don't want to take much of your time. I know you have a very busy.
Anytime.
I know you have a very busy schedule, Dad. Send a hugs to Tony. Such a great guy.
I will.
And I hope you have a great 2023. You had a great day. Thanks a lot, Tom.
Appreciate it. Take care and say hi to everybody. Thank you.
Thanks a lot. Bye-bye.